Good morning, this is Jeff Hildebrand for TBL Traders. Today I'm going to speak for a few minutes on index futures and futures in general as well. Currencies, metals, grains. I'm going to speak mostly about index futures because I personally see them as a baseline. I find it interesting and enjoy trading around the world, indexes around the world. I trade particularly the S&P, the DAX, and the CAC. That's the German, the French, and the U.S. or German, French, and U.S. exchange. There's a few things to know about index futures and futures in general. Let me point out a common belief about futures and particularly index futures and why I think you should consider them a baseline. Obviously, index futures are a way to trade your perspective on macro data, news releases, ECB or Fed news conferences. One common consideration when trading an index future, and one reason to follow other futures at the same time, is often they're believed to add complementary, often divergent. So here's an example of gold here on the blue line and the S&P or the ES as the candles. Often people believe gold is a safe haven and that when the market is falling, gold will be rising. In this case, in April, that was the case. There's nervous information. I don't know what the news was at the time, but people are nervous here and the market will fall a little bit, and they will adjust their positions to gold, which you see here. And then as things calm down and the market rebounds, you'll see the reverse happen. So you can often trade the indexes while keeping an eye on other products. Gold is a very good example. Oil is another. And silver is similarly in line with gold. The leverage is different, so you would use it for different reasons. So what happened here is we found a channel for both. Things were calm for a little while. And now what's happening, which is really interesting and why I'm pointing this out, is because gold has been falling, okay? And the market has been rising, which you would expect here to here. But all of a sudden, we have a channel starting at the beginning of June, which I would say continues upward. So gold and the S&P stop being divergent. That creates an interesting trading opportunity. That's why index futures are interesting, and especially interesting to compare against other products. The futures market, popular futures products, okay? Here's a list of NYMEX most active: gold, oil, silver, copper. You see the list here. Oil, again, there's lots of different types of expirations, products in the futures market, even within single products. The volume is important to keep an eye on. Most active is important to keep an eye on. But this gives you an idea of, on the NYMEX, what popular futures contracts are. Globex, you see futures on the ES. Lots of Euro-dollar future contracts. British pound, euro dollar, Canadian dollar, and the E-mini. So it's interesting to understand which are popular products. I will point out a few other popular products. Here, these are the products that I track. I know them fairly well. Currencies, I'd like to trade the yen, dollar, oil, natural gas, and the metals. Grains, occasionally. I spoke about grains in the other videos. They're a little particular and different. Future markets often are cyclical based on season, particularly in the with grains. You can trade bond futures, you can trade currency futures. Voila. So those are some different products, and they're very popular. They behave differently. I think oil might be an interesting one to look at right now because of the macro news as well. So I'm going to add oil to this and we'll just have a look. Okay, so I replaced the gold and I put in an oil. The blue line is now oil on the 3-month chart. You can see the difference. There's a higher correlation between oil and the markets here. Surprises me a little, but not too much. You can follow the rise in oil and assume that that's because of the situation in Iraq at the moment, and you can see the rise in the market and assume that that's because of the situation at the Fed and QE at the moment. Again, I like to look at these. I like to look at different futures products together to try to see if I can find divergences or possible trades. What I want to look at now or talk about, because we're looking at indexes, is to point out the difference in leverage for the different indexes. Also be aware that the trading times on these are particular. They're not just market open. So they close for about 15 minutes, between 3:15 Chicago time and 3:30 Chicago time. Then they reopen, and they're basically open 24 hours by 24 hours, which gives you a possibility to trade the DAX or the CAC or the S&P and sort of work your way around the world if you want. Okay, so let's look at a couple indexes really quickly, and you'll see what I mean. Look at the multiplier here, 50. That's for the S&P. If I take the NASDAQ, I don't have it on my screen, but if I take the NASDAQ on my chart, where I get an idea of nominal value, the NASDAQ is a multiplier of 20, the E-mini S&P 500 of 50. So if you notice, your nominal value is about half as much when you trade the NASDAQ. That's really important to know. The CAC, it's about the same. It's about half the value of the S&P, and that's good to know when you're trading indexes, because you need to manage your risk and you need to manage how many contracts you buy or sell or spread. So that's about it for indexes, I think. One other thing I'll tell you is about how I trade indexes anyways. I like to trade indexes on shorter time frames. Really, the S&P futures, NASDAQ, DAX, those are markets that I trade daily. I like to trade those daily. I like to trade news. Yesterday there was a really good trade here on the Fed announcement. You should be careful of those trades, but as you get experience, you'll be able to trade that and fit these ranges and decide on buy or sell below or above your ranges. That's not a bad way to trade indexes. Indexes are also very good trading tools on the short term for ranges. They're good for trends, maybe on the longer time frame. Obviously, we've seen the trend here for a while. So indexes are nice products to trade at least I prefer to trade them on a short term, or to use them as a hedge for my option trades. That's about it for index futures. Let me know if you have any questions. Thank you.